Well, it says we're now streaming live on Facebook. So, Andy, hopefully this is the case. Good afternoon, everyone. It is 12 o'clock. We thank you so much for joining us. I'm Joanne Purton from WOMC. More importantly, today I am here representing the New Day Foundation for Families. I am a board member, and we bring you these virtual workshops to try to help people, families going through cancer, with anything that they're facing. You know, New Day does a lot. We're going to talk about what we do in just a little bit, but we thought that, you know, finances and the burden of financial hardships are such a reality for people facing cancer. And it is World Cancer Day at that today. So we thought today would be a good day to meet in this format on Facebook Live and give you some resources if you are dealing with not just cancer, because my gosh, there are so many people dealing with debt in their lives, whether you're struggling with a cancer diagnosis or any other big life event. Maybe it's just student loan debt, credit card debt. No matter what it is, so many people are going through tough times financially. So we are here to help. And I am joined by Andy Manthei. Andy has a rich canvas of experience. He's with GreenPath Financial Wellness. He's got a rich canvas of experience to draw on from his time as a branch manager and a loan officer for a credit union partner with GreenPath, to more than 12 years at GreenPath in roles of financial counseling and working directly with partners to create financial wellness programs and their impact. So Andy currently is a business development specialist with GreenPath Financial Wellness. He's empowered people to live and lead financially independent, healthy lives in his previous role as a GreenPath financial wellness expert. So Andy is with GreenPath, like we mentioned. I just got the notification now, Andy, that we're live on Facebook. So I maybe just want to go back a little bit and say a couple of the things that I just said. And I want to share this on my Facebook page as well. But yeah, we've just been going here for a couple of minutes. So again, this is World Cancer Day. I am joined by Andy Manthei from GreenPath Financial Wellness. I also want to thank Comerica Bank for their support of the virtual wellness series that we do here at New Day Foundation. We want to thank them for providing resources to patients and families through the support of these workshops. These are free. We want to be here to help you. We want to be here to help these cancer families go through tough times and get back on their feet financially. And that's why we have Andy here with GreenPath, because GreenPath is a fantastic nonprofit that helps as well. So Andy, I'm going to have you start. I'm going to kind of look distracted for a minute as I share this on my Facebook page as well. But maybe you could start by giving us a little idea of what GreenPath does, and then we are going to get into the nuts and the bolts and really amazing user-friendly information to help you if you are struggling with debt. Take it away, Andy.
Thanks so much, Joanne. I'm so honored to be here. GreenPath has been around for 60 years. 2021 was our 60th year, and we exist to help people manage their financial stressors. Everything from, I need to improve my cash flow to I'm really thinking about purchasing a home, or I've got a home, but I started to fall behind. What do I do? How do I deal with all of my debt? Things are just mounting, and I had a plan, but it didn't work out because life happened. And that happens to so many of us. And we know that finances are probably one of the top 3 stressors, along with things like our health. And it has so many impacts on our relationships, on our physical well-being. So I'm very thankful to be here to be able to share some of these things, because sometimes when we're in a very stressful situation, we turn into more of a fight or flight. We don't always think as clearly about stuff because we're just trying to survive the day to day. And so my hope is through all of this today, you'll have some concrete ideas about what options are available and really be empowered to start making some decisions that could impact your situation. So thanks so much for this opportunity.
Oh my gosh, you're welcome. It is wonderful to have you here. And I know GreenPath, we can see on the screen here, you guys offer financial assessments, housing counseling, credit report review, debt management. I mean, you really cover the gamut of what's out there to help people who are going through tough times. And I want to mention too that New Day is also there to help people as well. That's what our nonprofit's all about, is to help people specifically facing cancer diagnoses. But this again is information today will just benefit so many people. But we offer financial assistance to people who are going through cancer. We offer emotional support, great grocery service program as well. So there is so much that New Day can offer to you as well. But Andy, let's start. we all want to get financially healthy. We know what a burden not being financially healthy can be, especially on your health. So why don't you start with what it is that we're going to be looking at today?
Yeah, I think when we all start to, everybody's got a different idea of what they feel like when, if somebody says, "Are you financially well? Are you financially healthy?" And I think a lot of it boils down to, at the end of the day, do you feel pretty comfortable in being able to live your lifestyle, the things that you enjoy doing? Do you have some flexibility? Maybe you like to enjoy traveling and things like that. Well, what happens though when you have a financial shock, which happens in life? Every person goes through it at some point, whether it's a job loss or anything. And with so many people dealing with a diagnosis like cancer, what a financial shock there, because it's going to impact your ability to work for a period of time. So even if the prognosis is really good and you have treatment options, it's going to impact a lot of times the spouse maybe that will accompany to appointments. I mean, there's just such a wide range there. And so when we start to think about financially healthy lifestyles, it's starting to think through, how can we make the best decisions for us? How can we prioritize things according to the things that are most important, and making sure that we understand all of our options, knowing that there are usually quite a bit of options available in a wide variety of ways. I mean, even when I was counseling, I didn't know about organizations like New Day, but I counseled so many people who could have used that.
Yeah.
And so, this is such a great awareness opportunity for people to know that there is some fantastic support available.
Okay.
So,
And I know today we'll talk about, Andy, some of the warning signs, options. There are things that people can do on their own. There's also options you can take with your creditors, and there's options with a third party as well. And it's really important to understand the difference. So why don't we begin? If you could begin with us, this idea of overextended. How do we know if we're overextended, and what's the first step?
yeah. So, and sometimes again, when we're feeling financially stressed, we're just trying to make it day to day. And so sometimes we have to take just some step back and start looking at our overall situation and say, okay, do I know how much debt that I actually have? If I'm not really sure, that means that, things are ballooning, and they're probably getting to an unmanageable state. Also, if I can only make that minimum payment, the $25, the $40, whatever that credit card might be, if I'm not able to actually start taking some of those payments and applying them more towards principal, I'm getting to a point where it's going to be unsustainable. If I start looking at cash advances, usually those are the ones that, if you look at your credit cards, for example, those are the 28%. So if you do a cash advance, much higher interest. So you're using that to supplement things to pay for gas and groceries. If you're starting to see that you don't have any limit left, if you've maxed out your credit card, or you're starting to get over the limit fees because you've gotten to a point where that last tank of gas actually puts you over the limit. So when you start to look at those types of things, as well as the collection calls pieces, those are the pieces in time where it's like, okay, I need to take a step back and see, what are my plans now to really deal with this.
Okay, so I mean that gets us to the nuts and bolts of this, really. So you've decided I'm over my head. I've got a lot going on here. What are some of the tools out there to help you get out of debt? And we all know there's a lot of different kinds of debt.
Yes. So it is really evaluating, because for some people, I mean, it can be a pretty sizable debt, but your mortgage, but that could be, well over six figures on some of those things. The secured debts like your car, et cetera. Sometimes people have personal loans or credit cards. So kind of looking at what's available for the types of debt that you have, and then seeing what might make the most sense, because then you can start to look at, there's a lot of different calculators that are out there that can help. There's organizations like GreenPath that can just, pull in a soft pull of your credit just to see what's out there, and then start to look at, okay, here's what you have as minimum payments. How are things looking for you to evaluate that as well? Sometimes there's even some financial technologies that exist. There's lots of different ones that are kind of keep popping up there as well. But different things that really help you identify your cash flow and start to really look at ways that you can start to deal with the debt that you have. In some cases, we're looking at the mortgage side. So on GreenPath's website, greenpath.com, there's actually a mortgage assistance guide. There's a very easy 6 steps to take if you start falling behind on anything. There's also, we even have a housing crisis webinar and some other resources there as well. For student loans, now that is a whole nother mess right now because everybody hasn't had to make payments in nearly 2 years. But in May, I think that's going to change. So if you have some additional questions on like what are some of the options that we're looking at, studentaid.gov under the managed loans can be helpful. And then we also have some student loan strategies. There's a webinar that's out there on our website as well. So those are just some of the base tools.
Okay. Things that you can do on your own. I know, first of all, to figure out where you are, you really need to look at your budget, do you not? I mean, you need, and not just look at a budget. First of all, some people may be going, budget, I don't have a budget. You need to know how much money is coming in and how much money is coming out, correct? That's critical.
Yes, and you nailed something very integral. I mean, I've been working for GreenPath. Next month, it'll actually be 13 years already, which is just insane when I think about the amount of time that I've been here. And every year, the National Foundation for Credit Counseling puts out a survey, and every year it hovers right about 60% of Americans' budget. And again, some of it is due to crisis because we're trying to survive, we're trying to make it day to day, make sure that we keep the lights on, food on the table, things like that. And so one of the first things that you can really look at is, all right, Joanne, you nailed it. How much do I actually have coming in? I'm not looking at my salary. I'm looking at when my paycheck hits, how much is actually hitting the account? And then start to actually map out some of those important expenses. What are the things that are the have-tos? It's my housing, my food, my shelter, my clothing. Those are the things there. And so then out of that, there's a whole aligning priorities as far as, okay, so I do want to have, make sure that I have my utilities paid. So that factors into the housing piece. And then you start to go out a little further from that and say, all right, of these other pieces, do I have a little bit that I can entertain myself, whether it's a Netflix subscription, whether it's something that people can at least feel like they're enjoying their lives in that regard. But you have to really evaluate all of those things and say, what are the most important pieces? I have these medical bills, for example. I've got to make sure that I have a payment for those. And so in all of those circumstances, really taking a look at the budget and saying, how can I change this? Is there anything here that I could do without for a period of time that could really help me accomplish this? Or I have a goal in the next 6 months, I need to have this done because by that point, that's when some of these bills are going to start coming in and I have to free up dollars to cover those things. So what am I willing to potentially sacrifice right now in order to tackle that?
Those are big questions. And I know a lot of people don't necessarily want to sacrifice something, right? It's like, but I love Netflix and I love to watch cable and I love this and I love that. But if you're in a real bind and debt is strangling you, there are going to have to be hard decisions to make.
Yes, and that is one of the challenges. I once counseled somebody who, they got a Starbucks coffee every day, and I looked at it and I said, okay, it's not a need. And he said, look, Andy, I have canceled my cable. He was on as bare bones of a budget. He's like, that's the only thing that gives me like a sense of normalcy. I said, okay, I get that. So what else can give? And so, I'm all for supporting you in that, emotionally, it's so beneficial to us to be able to treat ourselves from time to time. But is it impacting anything else that we need? If we have the car to get to work in our appointments, if we have the house, what else is there, as far as that goes?
Yeah, it's so important to look at all of that stuff and to not forget when you're looking at your budget to make sure that you have a real handle on all of the money going out, right? And prioritizing again, the money that needs to go out, because it's only after you prioritize the debts and what you have to pay versus what you just want that you can make a dent in tackling that debt, correct?
Yeah, and there's behavioral pieces here too, when you start to think about what happens to the money that goes out. I often think of, if you've ever had a $20 bill in your pocket at the beginning of a day and at the end of the day it's gone, where did it go?
Right.
Or, it's so easy to say, oh, well, that was only $3, so I'll just do that. And then, a little later in the day, well, that's just $7, and then before you know it, all that money's gone out of the account and it's not there to deal with the things you need to deal with.
Yeah.
And so, yeah, as you dig into all of these things, really evaluating, is there some give and flexibility? And then I think you really hit on it, as far as the debt goes, like how strangled am I by this? Because, you know, if it feels like I'm so impacted by this and it's keeping me up at night, because the levels seem insurmountable, that's when we really have to take an even deeper dive to say, can I even throw an extra $20 a month on this? If I had a little extra on this paycheck, could I just, instead of leaving it in the account and making it with the other payment, maybe I just send an extra $20? You know, it's things like that that we can use strategically.
Let me say this right now, because I know that there are probably some people watching who are saying, okay, guess what? I don't get a Starbucks coffee every day. I have pared it down to the bare bones minimum. And I've still got so much debt, and I've got bills, and I've got all of this. I know you want to talk about ways now that you can actually, even the idea of like liquidating some assets, some really hard decisions, but ways that you can tackle some of the debt.
Yeah, it's a great thing to do. And I do have that little caveat in here. If the money is used to pay down debts, you know, sometimes people do have an extra car, or they have some furniture that's just been sitting in their basement. Facebook Marketplace is a great place for this. Sometimes it's as simple as doing a little spring cleaning. I mean, I know we're in the midst of February and a big snowstorm, and it's, you know, the teens right now, but, you know, starting to think ahead, like, when was the last time I cleaned out my kids' closet? Like, are there clothes there that maybe I could sell that could help towards this as well? So a lot of times people do have some assets sitting around that you might not be as aware of.
Yeah.
You know,
Garage sales, right? Go through your stuff,
yes.
you know, or there, I mean, I know, for example, even things like a, gosh, my daughter the other day said, Mom, I took some of my clothes, because she buys a lot of her own clothes. She said, I took it to Plato's Closet, the resale shops, where you, like consignment shops, basically, you know? So there are ways out there that you can take some of things that you have that could be worth something and make some money, some actual cash off these things.
Yeah. Well, and there's even interesting things like my son loves Pokemon cards right now. And he's been out, there's actually a website that can go on, and some people will actually pay money for those if they're in decent condition. So maybe you have stuff that's been sitting in a box somewhere that you haven't even looked at, that you might look at as just some junk or kid's toy that somebody else will actually pay money for. So yeah.
Right. What's that saying about with someone's junk is someone else's, whatever it is, you know?
Treasure.
Thank you. I'm not great with expressions. Okay, but this brings up the next point to me, which is, okay, so either you try to find some of those ways that you can get some extra cash flow in there, whether it's a side gig, a side hustle, right? Something like that, another way to bring in more money, or get rid of some assets that you can and pay down debt with it. That's a very important point you made. So there's a couple ways I know of paying down debt. There's like debt snowball and debt stacking, I believe. Can you walk us through the different options for paying down debt? Because they're really two different ways of looking at it.
Absolutely. And Joanne, I don't know if anybody out there could throw in the chat. You just got me thinking about, I forgot to talk about potential income. There's actually an app out there called Steady App, where they have curated jobs. They're an organization that participates in a national financial health network. They're a really great organization that we've vetted. And the average person with their side gigs that are on there makes about $5,500 annually. So it's a little over $400 a month. And some of it's the stuff you might think of, Uber, DoorDash, stuff like that. But there are also customer service jobs, there's data entry jobs, there's all sorts of interesting things. We've actually had a number of Green Path clients that were struggling to pay down their debts, and they went out, and we've had over 217 people fill out jobs and actually get some supplemental income there. So
Steady App, is that what you said? STADY? STADY.
STEADY.
I knew I was missing a letter. I'm like, this does not sound right. Okay, Steady App. All right, well that's a great resource. Great,
yes.
Thank you.
All right, so debt snowball. So this is really fascinating. And the difference between the debt snowball and the debt stacking comes down to the behavioral wins that you like to see. And the reason I mention it that way is debt snowballs deals with the lowest balances first. Debt stacking deals with the interest rates first. And I'm going to show you how this actually works with an example. But what some people like to do is they like to check off the box. They like to say, I won at this. So a lot of people do like the snowball effect, but there's a lot of people who say, I hate that this company takes all my money and interest, so I'm going to tackle the highest interest rate first. So,
You know what? Let me just say this, Andy. It's like to do a to-do list, right? Sometimes there are people who will put wake up, take a shower, get dressed so that they can check 3 things off their to-do list really fast and you feel like you're accomplishing something. So if you're that kind of person, debt snowball is probably for you. If you only put the big things on your to-do list, then net stacking will be for you. But let's start with the snowball.
And this is really cool. I love this example because you can see how quickly this can escalate your payments. So as you start to see each situation here, when you start to pay off the debt, you add it to the next debt. So as you can see over here, that payment has now gone up to $120. Well, on a $500 balance, you're able to pay that off pretty quickly, within about 4 months. So now you take that 120, you add it to the other payment for the personal loan. Now you're looking at $156 on that payment. Well, if you've got that much money going on a $700 balance, that's going to come down very quickly as well. So once that's paid, you add it into the next payments, and so on and so forth. And as you see these numbers escalate, look at the size of these payments and how much they've elevated and how quickly that can then tackle the debt. Yeah. So, by the end of the day, you had, 5 debts out there, including credit cards, medical, et cetera, and you were just paying like a little bit spattering. And by the end, you're paying almost $600 a month on that one debt. But at $2,500, you're out of debt in, roughly 4 months or so. So
great. Yep. All right. So that's debt snowball. Debt stacking is tackling interest rates, as we said.
Yes. So what I often recommend in that case is you do a similar setup where you just list them, though, top to bottom, what has the highest interest rate. And then any of those extra dollars, if it's $20, $30, it does not have to be significant, but boy, what a difference it makes when you can start doing that. And I don't have as detailed of a list on here, but the idea is the same, where as soon as you get that highest interest rate paid off, you start taking the payment you were paying there and then tackle the next one, and so on and so forth. So and that's just escalates. And then before you know it, you think about $600 a month when you're debt free. Now it comes back into your budget to save, to put away for additional emergencies, maybe do the home repairs that have been delayed for a bit, whatever it might be.
I love it. All right, so that's debt stacking and debt snowball. That's stuff that you can do on your own, as you mentioned, Andy. But now there are a lot of people who have either said, okay, that's well and good, but I don't have extra money or that's my problem right now, is I don't have the money and I've got this debt. Sometimes I can't even make the minimum payments. You can talk to your creditors. How do we go about doing this? And do they listen and do they work with you?
Surprisingly, they do. It's hard because as people, we tend to be more fearful. And so we initially think, they won't. But there are a lot of different options. Now, some of them may not be the best financially long-term, but short-term, they can really help out. So, what if, you had a card loan, it was a used car, maybe it was at 4.5%, and your credit union is now offering a 2%. Well, refinancing that into the same term will probably lower your payment, or maybe extending the term a little bit. You may pay a little bit more interest long-term, but that lower interest rate will bring your payment down in the short term. Some people will do that with their homes and things like that. So it's really evaluating, is this a short-term hardship or a long-term hardship? Because the short-term hardship, something like, this might not fit as well, but a long-term hardship, maybe it does, because you need that flexibility monthly built into your cash flow overall.
Yeah. Absolutely. I do see that we had a question popped in. I think you're going to talk about it, but I do like to address people when they ask questions as quickly as we can. It is, what are your thoughts about consolidating credit card debt onto lower rate cards?
Yeah, it can be an incredibly, I've even done it personally, and I work here. Fortunately, in the last year was when we were finally able to pay off credit card debt. But, I'm a family with young kids. So, I say that to resonate with what people have. And I used to do the 0% thing, where it's like, oh, I could get an 18-month 0%, same as cash. Wow. If I can do that, I could tackle that much quicker. the challenge that always runs into any of the options that you have out there is, do you have a solid plan on it? Because for a while, sometimes I would do that, but then I'd end up having more debt on it because of other things that happen, a home repair, emergency, different types of things like that.
Yeah.
And so, but as far as being if you go from 18% to a 7%, fantastic. Utilize that. Absolutely.
Yes.
It'll make a difference.
I want to get back to the screen that we have up right now, which is the speak with the decision maker, know your options, propose new payment, and make a paper trail. I love the paper trail, right? It's important to document everything you've talked about, right? So it doesn't come back to bite you. So you've got proof of the conversations.
Absolutely. Because, a lot of times the frontline staff isn't armed with the tools that you may need. And so they may have some things, but most of the time you may have to escalate to a supervisor. And as far as the paper trail, if you can say, I talked to Joanne on such and such a date, and, this is what was laid out. A lot of times they have the sophisticated enough technology where they can even go back and pull that call. But it also shows that you are, they can understand and say, this is what was told, so we'll honor that. But at the same time, it also just says, look, this is how you've told me to be able to handle this. What changed along the way, especially if they try to tell you something different. So,
right. Some of the other options when you're dealing with creditors, I know, loan deferments, loan forbearance. Get into that, please, and what those terms mean.
Yes. So similar, deferment and forbearance are very similar. The idea is, bless you, deferment is designed to be able to defer a payment for a period of time. So a lot of times this is very effective in the case of a medical hardship or disability, in the case of unemployment, those types of things, where they'll actually give you a breathing room space. And forbearance is very, very similar in that regard, where it just forbears the payment for a while. A lot of people did this with their mortgage payments coming out of in COVID. If it was like, hey, I'm going to be laid off, I work in the service industry, all of those different types of things. Then there's extensions. So the idea there is it's usually coupled with deferment or forbearance and says, look, we're going to defer these payments for a period of time. We'll take those payments and we'll put them at the back end of the loan. Or you can now resume your payments. We're going to need to extend the period of time to pay that back. And then you can, it'll take longer to do it than you originally did, but it gives you enough breathing room in the short term to accommodate that.
Okay.
And then in some cases, it could even be looking at some kind of consolidation loan, whether it's onto a lower rate interest card, or a lot of financial institutions will do some kind of consolidation loan. The one challenge is because most of these are unsecured types of debt, there may be limits to how much they would be willing to lend. So like if you're in a position where maybe you have $30,000 in debt, they may say, whoa, that's a lot, where we may not feel as comfortable with that being unsecured. But maybe a smaller amount, 5,000, 10,000, they would consider it. And because it's a fixed term and a fixed rate, a lot of times you can get a more favorable interest rate. So
it sounds to me that the bottom line is you can't be afraid to pick up the phone. That I know people sometimes it's just so natural to almost bury your head in the sand. I can't deal with this. I'm doing what I can to pay my minimum payments on everything, but I'm sinking here. But you will not know if you do not either reach out to your creditors, reach out to Green Path, reach out to New Day, seek help. Because there is help out there. There are people who can help you when you're facing these difficult times. And before we get into medical debt, because that could be what some of the people watching are dealing with right now, we have another question, which is, what are your thoughts on apps like Digit for budgeting and smarter spending decisions? Do they work?
They can. It's one of those things where some people have the best intentions, and then, but it can. I think that's where it comes down to how committed someone is to that. And I don't mean that in any light way. It's just I know how busy lives get. I know how stressors affect our lives. But kind of really staying on top of some of those things. The one thing I will say behaviorally, it can be hard sometimes to track every single thing that you spend money on. It can feel very daunting. And so a lot of people, it's like a diet. Like, what do you mean I can only have 1,500 calories a day? I really want this cookie. So it's kind of like, those are the things that we always have to work on in our minds to work through. So, but can they be effective in the data that they can get back to you and show you some things about how you're spending money? Absolutely.
Yeah.
So I
My husband
totally,
does a budget for us, and it's amazing when you look at it, what, like restaurants and travel and this, when you break it down and see how, clothing, spending, shopping, it's really eye-opening. And there are many credit cards that will track it for you. Like you can pick different, like our credit card, we could say, what have we spent in restaurants? And boom, it pulls up all the restaurants. And, there are just a lot of different ways that can help you track your spending and figure out exactly how much you are spending.
yeah.
Does loan deferment or forbearance impact your credit? If so, how do you know if you should still do that? Someone asks.
So typically they do not, because they might show up on a credit report that says this is in deferment for a period of time. That often happens with student loans when people come out. That's a more common thing than a hardship like this. But most of the time they do not impact, because you've worked with the creditor. Because when you think about the data that credit is trying to evaluate, it's saying, I borrowed money, I said I would pay it back according to these terms, and that's what I did. Well, if you aren't always able to do that, to show that you're actually working with the creditor, and instead of just saying I'm not paying anything, always has a more positive impact.
Yeah, that makes great sense. Let's talk about medical debt now, if we can, because that is what a lot of people struggle with. And there are things you can do with that too.
Yeah. So what's really interesting, and I don't know if most people know this, but many hospitals are actually nonprofits. When you think about, groups like St. Joe's, for example, I mean, they technically are nonprofits, and they actually have funds available for philanthropy, for these different types of things. This happened way back when my wife and I weren't quite married. She had a medical issue, and we didn't have much money at the time. We weren't married at the time, and she didn't have the same medical insurance. We worked with the hospital and were able to get a grant towards those funds. So sometimes they actually have assistances like in line. There's organizations out there, not exactly like New Day, but other ones who do help with medical debt. You can always ask for payment plans, lower prices, really kind of seeing about what options are out there. Our general recommendation, though, is don't put it on a credit card, because then that's impacting some other things. Most of the time with medical debt, it's not showing up on a credit card where you're making monthly payments, but a credit card is. And because that can impact other things like insurance rates and other pieces there, the only time medical debt typically will show up is in collections, when you've actually gotten to a point where they've moved it forward that way. And so there's also some things around recent legislation that medical debt does not impact credit scores like it once did. So try to work it out with the hospital ahead of time. Don't put it onto other forms of debt. And then, see what you have to do to prioritize, because if it's impacting, like if the hospital says we won't set an appointment for you or do these procedures for you until this is carried, make sure you have some payments set up for that, but don't use the credit for that purpose, if that makes sense.
No, it does. It does. In organizations like New Day, we can help with other things like paying, the mortgage with grants and grocery bills and things like that to free up money to go to other things that you need to. So, all right, let's talk. Okay, so we've talked dealing with your creditors, dealing with it on your own. How about a third party? There are those debt settlement companies you see advertised. Good, bad? What do you think?
Well, sadly, a lot of them are not good. And the whole thing around debt settlement is most of the time when you see them, it's going to be when you're stressed about money at 2 a.m. and you can't sleep, and they'll throw an advertisement in there and they'll make it sound really, really neat. But what happens is when you call them, they'll say, okay, so here's what you do. You stop paying your credit cards, and then you pay us monthly. We're going to take our fee. And then after a period of time, we'll offer them pennies on the dollar, and then that'll be it. Well, the company, oftentimes they move through a process. So they might start small claims court or some other kind of litigation against you. The credit gets damaged because you're now missing those payments regularly. So it's always something to just be cautious of when you actually start to evaluate what some of these things are. Look at all the fine print, find out how much they're actually charging for these things, because debt settlement can be a reasonable option for people who they've already fallen behind. They just couldn't keep up anymore. But then let's say they inherited some money, or they came up, maybe they got a really big tax return this year, and they could actually put some money towards it. Well, then you contact the creditor directly and say, look, I just came into this bit of money. I don't have all of it, but would you be willing to take this? I know I'm already behind. Are you open to that? A lot of the companies will do that. There's still some negative impacts for that, but at least it's not as bad as a charge off or anything like that. So showing that you at least tried to work out with the creditor always has a more positive piece.
Okay.
So
Then debt management plans I see here. Let's talk more about that too.
So debt management is different because it actually finds a way to work out payment arrangements. So it's something that GreenPath actually does. And the idea is that we can lower interest rates by working with the creditors. They've done research and they've really looked at it and said, we know that with support, people can actually pay these back. And so what happens is that the average interest rate goes from 22% to 6%. Sometimes it's even lower depending on the hardship. We even have some hardship programs that some of the creditors will even go to 0%, but you pay back the debt in full. And so from a credit perspective, that's positive. So what happens is that you end up paying one payment to a nonprofit organization. Doesn't even have to be GreenPath. There's all sorts of consumer credit counseling agencies like ours out there that are nonprofits. And you make one payment to us or the organization, and then they make the payments to all of the creditors for you. So it simplifies your life. It gives you structure. You don't have to worry about that. You can just usually worry about, your mortgage and your food and call it good. Then a lot of times then it does improve the credit because all the payments are made on time. The payments actually will go down. I've actually got a couple of examples here of, if you were to make minimum payments, 161 months versus 58 months. So think about all of those payments times however many months that is, almost, over 100 months. That's a lot of money that's just left out there. And you can see like what some of this looks like with interest rates. And then, people's payments will often go down. So it improves the cash flow through that, as opposed to, so if somebody's paying $500 a month, now maybe they're paying $300 a month. Well, that can have a big impact overall. So
well,
definitely an option.
Yeah. And now we see the next option, which I think is the last resort for a lot of people that don't want to think about bankruptcy. But again, I just getting back to the other screens and what we were saying, I just want to reiterate again, some of that, you may be looking at some of that thinking, I can't figure all that out. Again, there's help out there. There are nonprofits like GreenPath, like other agencies that can help you if you need help kind of understanding all of this. New Day offers financial resources and help, and we can steer you to a place to get help too. So just bottom line, no, you're not alone. It's so overwhelming. All of it can be overwhelming, but just don't try to tackle it on your own, I guess is the message that I want to make sure that we're sending to people today. Because help's there, and you deal with people all the time.
Well, it makes me think of something you brought up on a previous situation where, sometimes people will be like, we'll do a meal train. But what if somebody came and helped you make these phone calls?
Yes.
And when you mentioned that last time, Joanne, that stuck with me. And it just really resonated because it's like, how can I, if somebody really needs my help, these are the types of things that make sense. If I don't want to spend, if I'm feeling bad after, a chemo treatment or something, like I need help, but I can't sit on the phone for an hour. Well, maybe my family member can.
Yes.
So, it's looking at those types of unique ways to deal with all of this for sure.
I agree. I think it's a great idea with families. I mean, my gosh, how many times have we the whole idea of the meal train, okay, I'm providing dinner this night, and suddenly people are overwhelmed with meals. And if you could say, obviously it's got to be people that you trust to give them access to stuff. But if they can come to your house and help you make the phone calls and get bills lowered if possible and payment plans, etc. Again, another way to show that you're not alone, But so let's get to the bankruptcy, Andy. When is this the resort that you take?
So this is where, after you look at everything, you just don't have enough extra dollars to be able to make any headway on the debt. So it's a situation where you cannot continue your minimum payments. The debt load is so significant that, and unfortunately, medical debts are the #1 cause of bankruptcy. I mean, across whenever you evaluate all of it, that's what causes it the most. And so what ends up happening is it is the last resort, but for some people, it can give a fresh start. It can just kind of wipe the slate clean and say, all right, you know what, let's just hit the reset button here and we'll go a different direction. And so some of the things that it might do is it might help save the house. It might stop foreclosure. So give you some different opportunities to catch up missed payments, things like that. Maybe be able to keep the car, maybe halt any garnishments on wages, because sometimes when some of these debts have gotten judgments against them, they're starting to pull in wages. That's huge because your paycheck can be so drastically impacted from that. It impacts everything else. So that might be an option. Or utility termination. I mean, especially, my goodness, I mean, we're projected to be lows below zero. So, we've got to make sure that we have heat in our homes. Now, the other side of that is it might not eliminate other secured loans or mortgage, any other things that are out there like alimony, student loans, child support, etc. Might not eliminate those things, and it might protect co-signers. So if you at any point had, maybe a parent or grandparent co-sign on a loan, the creditor could still go after that person potentially. So just some things to kind of think through within that.
And there are different kinds of bankruptcy, Andy. I know 7, 13, 11, I think that may be for corporations, but I'm not sure. But maybe you could give us what the different bankruptcies are if someone is considering it and feels like it's the last resort.
Absolutely. So Chapter 7 is that's the liquidation. That is the most common. It can allow you to still keep property that might be considered exempt. What ends up happening, you do have to get an attorney involved here because there are all sorts of legal issues and understanding how the laws are written with bankruptcy to understand that, a counseling agency like ours won't be able to help you necessarily pour over. But at the same time, what it also allows people to do is, maybe there's property, like we talked about the liquidated assets earlier on a pay on your own. Well, the court sometimes will look at that and say, oh, you have this extra car here that's been sitting in your driveway. We're going to sell that and apply it towards your debt. So it's always something to think through. But Chapter 7 is really, that's the clean slate. And then Chapter 13 is more of a reorganization. So you start making a monthly payment based on, they look at all of your financials, they figure out a payment that seems like it would be comfortable for you. And then they start to divvy out payments to each of your creditors. Sometimes it's payments, it's pennies on the dollar. A lot of times people use this more for keeping their home and catching up on arrearages with their homes. But it does require a payment, and it's usually in that 3 to 5 year period. But a lot of people use this again towards the secured debt. So they'll use this on ways to catch up if they've had a hardship, about to go into foreclosure and loss. This might be an alternative way. So again, an attorney's the one that can really look at your situation, what your ultimate goals are, and say, okay, here's what we recommend based on your situation.
If you decide to do it, what is life after bankruptcy like typically?
There's hope. It's not something that's gone forever. And I think that what most people need to understand is there's ways to rebuild, but you have to think through some things like it's going to stay on the credit report. So at some point, people will look at it, but I've seen people within a couple years after bankruptcy be able to rebuild. And when they start to look at it, if you do plan to purchase a home, you're going to want it to be far enough away from the bankruptcy that the mortgage company isn't going to look at it, because it will affect interest rates and things like that. So it also does limit the credit options that you have, where, you got to make sure that you can stay within your means to rebuild. Because if some emergency happens, you probably won't have access to just traditional lines of credit until you start to rebuild from there.
Yeah, without a doubt. We have covered so much. If you're not sure what to do, which is the question we have on the screen right there, just in a nutshell, Andy, what do you recommend people do?
Well, I say talk to a nonprofit. It doesn't have to be Green Path, but Green Path is here. That's what we exist for. Talk about the goals, talk about, the spending plan, make sure that it aligns with the things that you value and that you think, are most important. Because we come at it from a judgment-free perspective. We just know things happen in life, and we want to help you be armed to empower you with the tools you need to be successful going forward. So take a look at your credit, discuss the impact to your credit of different options. If you're looking at it and you say, I can't do that because then it's going to cause this, then we got to find a way to tackle another option. But ultimately, we always do best as people with action plans. If we've
Yes.
got something to hold us accountable, then that tends to be something that we can be successful with overall.
Isn't that true? It's so true. And when you have a plan, there's just a weight that's lifted off you when you know you have a plan, right? And that's why we encourage people to reach out. We do thank the people who have asked some questions today. I believe, will make this available on our website, on New Day's website, for those who have missed it.